2008, the year the global economy fell to its knees. A crisis so devastating that millions lost their jobs, homes, and life savings. The culprit? A ticking time bomb in the housing market that no one seemed to notice, or perhaps everyone chose to ignore. This is the story of the subprime mortgage crisis. How greed, ignorance, and bad decisions triggered a financial catastrophe that changed the world forever.
It was one of the most profound events in generations with huge consequences for the American economy and households throughout the country.
And I know that there are a lot of people out there that are angry with the situation that we're in. Perhaps the administration and Congress hasn't done a good enough job of articulating why this is so important for Main Street, for average voters, hardworking people.
The American dream and the housing boom. For decades, home ownership has been the cornerstone of the American dream, a symbol of stability, success, and security. And for much of the early 2000s, it seemed like anyone and everyone could achieve it. House prices were soaring and the real estate market was on fire. Banks, eager to cash in on the boom, started offering mortgages to anyone who walked through their doors, even people with bad credit or no income proof. These were the so-called subprime mortgages, the birth of the bubble. But there was a catch. Subprime mortgages were risky by nature, given to borrowers who were less likely to repay. So why did banks hand them out like candy? Here's the secret. Banks didn't hold on to these risky loans. Instead, they bundled them into complex financial products called mortgage-backed securities, or MBS. These securities were sold to investors around the world, including pension funds, insurance companies, and even foreign governments. The logic was simple. If the housing market kept booming, everyone would make money. The homeowners, the banks, the investors, everyone. It was a win-win, until it wasn't. Warning signs ignored. As early as 2005, some experts began to sound the alarm. They warned that the housing market was overvalued, that too many risky loans were being issued, and that a bubble was forming. But their voices were drowned out by the noise of booming profits and rising house prices. Meanwhile, homeowners started feeling the pressure. Many had signed up for adjustable rate mortgages, where low initial rates suddenly spiked after a few years. When the rates adjusted upward, their monthly payments became unaffordable. The bubble bursts. In 2007, the inevitable happened. Home prices stopped rising. For years, homeowners and investors had relied on the assumption that prices would always go up. But when they didn't, the whole system began to unravel. As more homeowners defaulted, the value of mortgage-backed securities plummeted. Banks were suddenly holding billions in worthless assets. The financial giants, once thought invincible, started to fall. The collapse of Lehman Brothers and the global fallout. September 15th, 2008, Lehman Brothers, one of the oldest and largest investment banks in the world, declared bankruptcy. It was the largest bankruptcy filing in U.S. history and the tipping point for a full-blown financial crisis. Credit markets froze. Stock markets around the world plunged. Millions lost their jobs as companies shut down. Entire economies were brought to their knees. The subprime mortgage crisis wasn't just an American problem. It became a global catastrophe. The bailouts and aftermath. In response, the U.S. government stepped in with massive bailouts. Programs like TARP, the Troubled Asset Relief Program, pumped hundreds of billions of dollars into failing banks to prevent total economic collapse. But the bailouts were controversial. While Wall Street was rescued, ordinary Americans felt abandoned. Millions of people lost their homes, their savings, and their trust in the financial system. Lessons from the crisis. The subprime mortgage crisis taught us many painful lessons. It exposed greed and recklessness at the heart of the financial system. It showed us how unregulated markets could spiral out of control. And it reminded us of the devastating human cost of economic collapse. In the aftermath, new regulations were introduced to prevent a similar disaster.
Saying it is time to act and pass the $700 billion bailout plan. But he and the markets will have to wait at least one more day.
President Bush delivered a strong message to Congress. It's time to pass the bailout bill.
For the financial security of every American, Congress must act.
But even today, some experts warn that the seeds of another crisis could already be growing. The subprime mortgage crisis wasn't just a financial story. It was a human story. It was a wake-up call for governments, businesses, and ordinary people alike. The question is, have we truly learned our lesson? Or is history doomed to repeat itself? What do you think? Could a crisis like 2008 happen again? Let us know in the comments. Don't forget to like, share, and subscribe for more deep dives into the events that shaped our world.